Those were the headlines we're tracking for you this evening. You're watching CNBC TV 18 and this is Reporter's Diary. Straight to all the action on the Lal Street, where markets traded lower for the second day in a row, but a sharp spike in the last hour pulled indices off the low point of the day. The Nifty gave up the 10,800 mark and ended below the 200-day moving average. The Sensex managed to hold on to that 36,000 mark. Banks and mid-caps fell in line with benchmarks. Both indices shed about 1/5%, so it's completely red on your screen there. Now shifting focus to earnings corner, it was a mixed bag of earnings for IT giant Infosys. Dollar revenue surpassed expectations while margins missed estimates. Despite a miss on margins front, the company hiked its growth estimate for the coming quarters. Kritika Saxena joins us now with a breakup of the numbers. Kritika?
Well, revenues were solid across the board. So constant currency, 2.7%, dollar revenue, rupee revenue, all above what we were expecting. And that's why the company has guided for an increase. So in constant currency terms, FY19 guidance has been increased from 6 to 8% to 8.5 to 9%. The order book and the deal pipeline for Infosys remains strong despite the budgets being flat. Now, PAT is down by about 12.2%, and that's because of an additional depreciation and amortization impact due to Panaya and Skava. So that's about $12 million, and that's impacted margins as well. So margins are down by about 110 basis points. Higher acquisition costs, higher on-site costs, lower utilization, and of course a little bit of offset of currency has largely created that kind of an impact in margins. But the management seems to maintain that they want to remain within 22 to 24%. Now, here are the positives. Deals worth about $1.5 billion have been signed. Digital revenue growth is about 33.1% in year-on-year terms, 5% sequentially, which is still a positive. Core services growth is 1.8%, and it has remained at that. So if it reduces from this in the coming quarters, that could be a negative. The buyback has been finally announced. It's slightly lesser than what the markets were speculating. It's 8,260 crore rupees, but they have also announced a special dividend. So that will make up for that offset, and they seem to hint that there would be more capital allocation policies around the corner. If you look further into the internals, North America, Europe growth is positive. BFSI is 3.6% growth despite a softness seen in Europe in Q3, but retail is down by 0.1%. We asked the management that very question, and they said that by next quarter, that impact or the negative impact of seasonality on retail is likely to go. So all in all, margins, yes, is going to be something that the street is going to be upset about. But the fact that they have revised guidance means that the revenue trajectory is solid, and going forward, the internals seem to look strong for Infosys.
Our large deal wins were at $1.57 billion. This has become now one of several quarters, the last three, where we've had very strong large deal wins, taking us for a total of $4.7 billion for the year.
That's all the earnings action for the day. But in macro data, industrial output in November has slumped to its lowest level in 19 months. Growth is at a mere 0.5%. And this is against a CNBC TV 18 poll, which expected a figure of 3.8%. Now, the sharp decline is probably due to the tighter liquidity conditions at that point, as NBFC lending nearly came to a standstill. Now, the fall in growth was secular across various sectors. Manufacturing output saw a contraction of 0.4% after clocking nearly 8% growth in October. Capital goods was the worst culprit. Growth has contracted by over 3% compared to a robust 16.8% number that was seen in October. On to the other top story of the day. A day after his removal, CBI Director Alok Verma has tendered in his resignation. In his resignation letter sent to the Secretary of Department of Personnel and Training, Verma has alleged that natural justice was scuttled in his case. The ousted CBI chief has also claimed that Justice Patnaik has not signed off on the CVC report, which makes corruption allegations against Verma. Arunima joins us now with more details. Arunima, what's the latest update?
It seems finally this curtains for Alok Verma after being sent on leave, then restored by Supreme Court, then booted out of CBI. He's finally written to the Department of Personnel and Training saying, I quit. What exactly does he say? He says that I would have retired if you had not sent me to Central Bureau of Investigation, because the 60 years of age is the retirement age. But because CBI is a fixed tenure of 2 years, even after crossing the age of 60, I continued. Now that you've decided that I do not have the capability to continue as Director CBI, consider this date as the date of my superannuation. in terms of a layman's language, what this means is his resignation, refusing to join as the Director General of Fire Services and Home Guard. That is what legal experts were also asking yesterday when the ACC, the Appointments Committee of Cabinet, their order came out saying Alok Verma will be posted as DG Fire Service till retires, which would have been in first week of February. Legal experts were asking the retirement age for DG Fire Service is 60. Alok Verma is beyond that. How can he continue? Verma himself, without getting into that controversy, has answered. He's resigned from the services. So it's curtains down for the former CBI number 1. For CBI number 2, however, there is still the cup of wood is still overflowing as Delhi High Court has refused to quash the FIR against Rakesh Asthana.
Absolutely, Arunima. Thank you so much for the details. And as she was pointing out, after Alok Verma, his rival CBI Special Director Rakesh Asthana has suffered a big setback. The Delhi High Court has refused to cancel bribery case against Asthana. Now, the court has further directed the CBI to complete the investigation within 10 weeks and file a charge sheet. Ashmit Kumar joins us now with more details. Ashmit, tell us about the case and also what's next for Asthana.
Well, as you correctly pointed out, big setback coming in. The Delhi High Court refusing to quash the FIR as had been sought by Rakesh Asthana. As for the fact of the case, important to keep in mind that Satish Kumar Sinha, one of the persons who was facing an investigation, had lodged a complaint against Rakesh Asthana, alleging that he had received bribes of up to 2 crore rupees. Now, subsequent to that complaint, the Alok Verma camp, the then CBI director, in fact, had gone ahead and filed an FIR against him. Now, Rakesh Asthana moved to Delhi High Court, essentially arguing that this FIR is motivated. That these charges have been slapped as the motivations of the then CBI director Alok Verma were suspect, that he's trying to target Rakesh Asthana, and that this FIR needs to be dispensed with, needs to be done away with. However, the Delhi High Court has clearly held as of right now that there is no reason, there is no case made out for quashing of the FIR. Far from that, the Delhi High Court has in fact directed the CBI to go ahead and to complete the investigations within a 10-week period. What has, however, come as a bit of a relief for Rakesh Asthana is that the Delhi High Court has held that no coercive action can be taken against him for the next 2 weeks, that he has 2 weeks' time to go ahead and to challenge this order if he thinks it fit. A challenge from this particular order will lie with the division bench of the Delhi High Court, which is expected, the councils tell us off the record, they're expected to go ahead and to challenge this order. So that is, of course, for a later date. For now, a big setback coming in. The FIR against him with respect to bribery charges persists. The CBI is to proceed with its investigations. Thank you.
All right, Ashmit, thank you so much for taking us through all those details. Now, the 2-day National Executive meeting of the BJP has kick-started at Delhi's iconic Ram Leela Maidan. Over 12,000 party workers from across the country are currently in the national capital to attend this event. Opening the convention, party chief Amit Shah sounded the poll bugle and said that 2019 contest will be between Modi versus everyone else. He also said that BJP will increase its Lok Sabha tally. Parikshit Luthra joins us now. Parikshit, what is the sense that you're getting on ground over there?
Well, we'd like to tell our viewers that there was almost a stampede-like situation here at Ram Leela Maidan because the Prime Minister decided to go among party workers, greet them. So he took a small round of Ram Leela Maidan, and you can imagine what the scene might have been like. You had cameras rushing towards him at that point in time, party workers jumping fences, coming towards him. So there was quite a bit of a chaotic situation there a short while back. Of course, it's now coming under control. The Prime Minister, all the cabinet ministers, leaders took a break a short while back. They will resume the session again. Amit Shah, while concluding his speech, said that he would focus on some thrust areas for the 2019 campaign. But the message is very clear. Focus on the Prime Minister's work. Focus on the schemes that have been launched by the government for the youth, for the poor, for the farmers. They spoke about the insolvency code. They spoke about how 80,000 crore bank loans have been brought back to the system. They spoke about how bank accounts have been opened for crores of people in the country, how toilets have been provided to crores of people in the country. He also said that people like Mehul Choksi and Nirav Modi have fled because of the tight action that Narendra Modi is taking against them. They never found the need to run away during the Congress rule because the Congress had given them a long rope. He also hit out at the opposition, saying that Mahagathbandhan stands with terrorists and intruders, and the 2019 election will be Modi versus all. So this is a stage setting for the 2019 election, but we'll find more announcements from the Prime Minister's speech tomorrow. We asked a lot of ministers about the farm loan package, and none of them wanted to speak on that, saying that yes, this is something that had been discussed in the cabinet meeting, but of course we'll have to wait and see what the Prime Minister says. None of the top cabinet ministers wanted to speak on that issue.
Bank is still with us on Reporters Diary. On to a CNBC TV18 special interaction. MSMEs and the poor are better credits than some AAA rated companies. That's the word coming in from Bonden Bank's MD and CEO Chandrasekhar Ghosh. In a conversation with Lata Venkatesh a day after the bank reported its third quarter numbers, Chandrasekhar Ghosh also talked about the bank's business outlook and guided for continued strong loan growth. Take a look.
After 2 years relationship with ILFS, and the first we have been started in 2016, and every people also always talking on that, the Mr. Ghosh, your portfolio all are unsecured. No poor people, no securities there. You are high risk. And okay, what is then low risk? Low risk is in this type of institution, AAA. No, very renowned. SBI and HDFC is their shareholder, promoter. Government is their beneficiary. I feel that good. You can see that.
So what is? Can you tell us?
Then we learn about it.
So
that is not only the rating AAA.
Yeah.
That's the people. Those are poor. They are the best of our retain and customer.
And in more action from the banking space, 20 days left for Rana Kapoor's tenure as MD and CEO of Yes Bank to come to an end. Sources say Yes Bank's search and selection panel has recommended 2 names to fill in his shoes. The first proposed name for the top job is an external candidate, and the second preference has been given to Rajat Monga, who currently serves the bank in the capacity of senior group president. Sources also say that the panel had screened close to 8 candidates, out of which it zeroed in on these 2 names. Former MD of Max Life Insurance, Rajesh Sood, was not part of this list. Yes Bank has not responded to a query from CNBC TV. Welcome back. You're watching Reporters Diary. Olaf Koch, the CEO of Metro AG, sees the recent tweaks in the e-commerce rules as a boon for Kirana stores. He, however, feels that there is a need for Kirana stores to adopt a more modern approach in their operations. That's not all. He was speaking to my colleague Rituparna Bhuyan, who also laid out the Metro Cash and Carry's expansion strategy. He said that the German wholesaler would be more selective in their store expansion plans. Take a look.
Our business here in India is really focused on wholesale, and who we are supporting is the small business owner. So it's the Kirana, but actually it's also the small operator of a restaurant, a cafe, a public catering company. But yes, it's true, the small Kirana is by far the largest audience which we are serving. And yes, we are looking for what else can we do to make them more competitive, to modernize them, to give them access to digital tools. But we're also observing very closely how well can they compete in a world that is becoming more and more competitive as well on pricing. And there I think the most recent regulation here in India is just making sure that there is a fair balance of power and that there's a level play field, as you say, for everybody.
So you know, when you have big companies coming in with a lot of backing of cash and all, and then you have an ecosystem where you have small mom and pop stores, does it then actually impact those small Kirana stores or the small mom and pop stores? What has been your experience going by the feedback that you have from your customer base?
Well, my experience, and that's not only true for India, it's true globally, whenever, especially those neighborhood stores that play a special role, they're not only trading product, right? They are neighborhood services, they have a social cause while they're there, and that's why the customers love them. But they also need to have a longer tail of products, they have a new modern way of displaying product. They need to have also the digital component that people can order and that they can deliver. And just imagine when you do that, and that's what we are there for, we want to be their partner, there you have more than 90% of Indian trade being modernized, and that's a huge opportunity.
Right. Okay. Also, when you do are in a sector like retail in India, one common aspect that we see is, be it e-commerce companies or be it companies like you, discounts. You have to use discounts as a part of your business strategy. Is it unique to India, or is it also seen in other markets that you work on?
Yeah, price always matters. I mean, no question. You need to be competitive on pricing. There is no escape from that. But on the other hand, I think customers value the service, and they value the proximity, and they value the trust they have in the partner where they buy a product. And my observation in India is Kiranas are part of the society, are a very integrated part of the culture in India. And therefore I see, yes, the need for a more modern approach, and I also see the need to be more competitive on price, and we enable that. We encourage them to actually sell below MRP, and this is something which they are doing whenever they buy with us. We make sure that they have the right means to do that.
We understand that by 2020, there was a plan to have at least 50 stores in India. Can you tell us more about that? Because as of now, most of the presence that you have had is in the southern part of India. You've had some stores in Delhi as well. So now that you are going to expand to 50 stores, how are you going to go about it? If you can just give an idea on that.
Well, I think there we're going to be very selective. First of all, having now achieved the profitability level was a key milestone. Now we should double down on the regions where we're doing very well. It's of course here in Delhi, we're doing very well in Bangalore, but we're doing very well in other places. We will try to expand our reach, and that means that we will add a few more stores. Over the time, our ambition needs to be to cover the whole regions, and therefore there is no limit almost. If I look into the expansion plan we just discussed with the management team over the last 2 days, I'm very enthusiastic about that, but we also want to be expanding in a controlled manner, not make a big announcement and shout out, but rather make one step after the other.
But that is a wrap on this edition of Reporter's Diary. Many thanks for watching, but stay tuned to CNBC TV 18. Coming up next is Commodity Champions.